Tariff. Joining me now to talk more about the markets as we look to round out what's been a volatile week is Eddie Ghabour. He's co-founder and CEO at Key Advisors Wealth Management. Eddie, great to have you on the show as always this morning, joining us from Delaware.
Thank you.
What do you make of this market?
I think right now the market's starting to get a little concerned with some of the economy starting to slow down. And the government shutdown extending farther than many thought, I think, is also adding to that. So we get an agreement on the government and it opens next week like we anticipate. I do expect to see a bounce. But look, after a run like we've had since April, it's pretty common to see a 5 to 7% correction in the market. At the end of the day, we're focused on where we think we're going to be over the next few months. And when we take a look into the first quarter 2026, we think we're going to be in an environment where the economy is reaccelerating while the Fed is cutting rates. So we think this bull market has plenty of juice to go to the upside, but November is going to be a very choppy month. You have the concerns with the tariffs, you have concerns on what the Fed's going to do in December, the government shutdown, and the economy slowing. And the market always sells first and then asks questions later. So the biggest question is this a slowdown that will lead to a recession? Or is this just a slowdown and then we're going to see a reacceleration? And we are betting on the latter of those two things starting to develop as we go into the next few months.
How is this going to get resolved, Eddie? Is it simply a reopening of the government?
It's going to be that simple. Once they reopen the government, people get their paychecks, that money goes back into the economy. And most importantly, from a market standpoint, the uncertainty is gone. Markets hate uncertainty. And the more uncertainty you see with the tariffs and the government shutdown, it's going to sell off. And so I think it's going to be as simple as that. And I'm hopeful by the beginning of next week, our government will be open.
Yeah. Let's talk about tariffs as well, because certainly that has created volatility in the market throughout this year in different forms and to different degrees over time, but the Supreme Court is expected to hear the case on the legality of tariffs. What does that mean for the markets as we await that decision?
This is going to be a trickier one because right now, betting odds are that the Supreme Court is actually going to rule against the tariffs. And the biggest question is, are we going to have to pay back the hundreds of billions of dollars in tariffs that we've already collected? If we do, I think that's going to be a real negative for the market. If they just say moving forward, you can't do those tariffs or a different type of tariff, that'll be a different scenario. So I think it's going to be more of how the execution is going to be post-hearing and post-decision, because if we have to pay all those back, that's going to be an administrative nightmare, and that's money that's going to come out of our economy. So I think that'll be a problem as well, too, which is going to add to the choppiness that we're going to see here in the month of November.
What opportunities do you see in this market, Eddie, as we do see stocks pulling back a bit?
So at the end of the day, I think Mag 7 is going to continue. Tech is going to continue to be leaders. We added to NVIDIA yesterday when it broke under 190. These leaders are going to continue to lead if we are right on the bull market. And that's just a matter of math. When you look at the concentration in some of these Mag 7 names, it's almost mathematically impossible for them to not do well and the market do well. So we're adding to the names that are going to be the strength going into next year. And that's going to be leaders in the technology space, and they've had a really nice correction here, and so we would start dollar cost averaging. We're buying again this morning for clients that have cash, so we're slowly buying dips in November in anticipation of a big rally at year end and going into 2026.
Interesting. I do want to ask you about gold, because I know that has been an asset or an investment, if you will, that you've been very bullish on throughout the year. And we've seen record high after record high when it comes to gold. Has your view on that changed at all?
It has not. Now, we don't think the upside for gold over the next 6 months is as strong as the last 6 months. I mean, last year it was up approximately 40%. This year at the peak, it was up about 60% for our clients. So we've told them to expect a more normalized return in gold. But for us, it's a great asset class, a defensive asset class to own in conjunction with bonds, instead of having all of your defense in fixed income, because that's going to be very challenged as well, too, over the next 6 months, we believe. So we think gold is a great defensive asset to own. And the end of the day, we're seeing central banks around the world continue to accumulate gold. So we have natural demand in a defensive asset that works in a bull and bear market.
Eddie Ghabour, co-founder and CEO at Key Advisors Wealth Management. Eddie, thank you as always.
Thank you.